Here in 2025, doing it live and continuing to do more at 4 weekday afternoons right after Guy Benson. Now at 3 o'clock here every afternoon on 790 KBC. We do all this just before the 790 KBC News Blitz with Randy Wang at 5. It's Mottek On Money, live on the air right now, 790 KBC. Streaming live online worldwide at kbc.com. And you're on demand, Mottek On Money podcast, kbc.com, Apple, iTunes, YouTube, and all of your favorite podcast platforms. Stay with 790 KBC for the very latest on the Pacific Palisades fire and the current windstorm and blowtorch conditions impacting homes in the Pacific Palisades area. Godspeed to all of those residents, businesses, and the brave firefighters affected by this current firestorm emergency. Stocks did finish lower today as Treasury bond yields spiked after a pair of strong economic reports came out, and that put cold water in hopes for aggressive Fed interest rate cuts this year. The Nasdaq took a tumble, down 375 points, erasing all of yesterday's gains and then some, to end at 19,489. Looks like the Nasdaq saw its worst day since December 18th. The S&P 500 pulling back 66 points at 5909, and the Dow closed down 178 points, ending at 42,528. Stocks had kicked off the new week mostly higher yesterday, with tech stocks leading gains on resumed enthusiasm around AI. Today, NVIDIA was in the spotlight. The stock made a run higher, leading up to Chief Executive Jensen Huang's CES keynote speech, the Consumer Electronics Show underway in Vegas. But today, NVIDIA shares fell sharply following that speech. According to MarketWatch, a part of that could reflect investors selling the news of the event, which brought announcements around a personal supercomputer running a new Blackwell chip, as well as a partnership involving driverless truck technology. Looks like Rubin is the name of the new AI chip that NVIDIA is planning to come out with. NVIDIA's chief executive's keynote speech seems to have been a positive, though, for another chip stock, but not its own, Micron Technology. MU shares rallied today. The head of NVIDIA did mention that Micron is providing memory for NVIDIA's new Blackwell gaming chips. A lot going on in Vegas this week as the Consumer Electronics Show is underway. We will go live there later this hour to Dave Graveline, consumer electronics expert, high-tech guy extraordinaire, longtime contributor to this program and host of his own show, Into Tomorrow, at intotomorrow.com. Dave Graveline, also president and CEO of the Advanced Media Network. Watching the price of oil move higher, looks like inflation concerns have been fanned again lately. Looks like oil moving higher, shaking off losses from the previous session to resume a rally they started the year with, and also buoyed expectations for stronger demand. Looks like the price of crude moved up 69 cents to $74.25 a barrel in New York, and London Brent crude climbing 75 cents to $77.05 a barrel. Coming up later this hour, I'll be talking to Adam Millsap, Forbes magazine contributor, senior fellow working on economic issues at Stand Together Trust, and co-author of the Restoring the Republic paper, a 100-day plan on realigning government agencies with the Constitution and how executive orders play a role in that. This as President Trump is set to retake the White House on January 20th. But first, on your money, the markets, the economy, Bitcoin, the whole works. Joining us now for the first time in the new year is Bryan Perry, Chief Investment Strategist and Portfolio Manager at Mint Asset Management at mintassetmanagement.com, also author of the 25% Cash Machine. Good afternoon and Happy New Year, Bryan Perry.
Happy New Year, Frank. Great to be with you and your audience here, and we're off to a choppy start here for the stock market here, as well as you said blowtorch. I mean, that's what's happening in the bond market right now. We've got the bond vigilantes that are taking the blowtorch to the bond prices here. Today's auction was pretty good, though. You know, the bid to cover was about 2.53 on the 10-year. There was a large auction here, so and we have a 30-year due out tomorrow. So there's just a little bit of pressure here in bonds, certainly with those hot numbers you talked about earlier. However, the JOLTS number, which talks about job openings, was higher than expected. So we've got some conflicting data, which is going to keep people on their toes here going forward. Here we have the big non-farm payrolls number due out Friday, which is really going to move the needle one way or the other, in my opinion. And I think right in here, I do expect consumer spending to start to slow. It was a big holiday shopping season, as well as a travel season. So I think people are going to have to regroup, their finances into the first quarter here. So I think we'll see retail sales numbers come in slightly on the downside, which should temper the bond sell-off here going forward, but we'll see. We're on the cusp of earnings season here, which starts in earnest here the week of January 13th. A week out from now here with the big banks, money center banks reporting first, and some other large names, consumer product names like Pepsi. And what we're seeing there is expectations for a very vibrant fourth quarter earnings reporting season. So I think, at the end of the day, Wall Street really does care most about sales and earnings growth. And even though the bond market has not been cooperative here, we've had some serious headwinds of late. I do think that the earnings season here will show up well for the market, and we'll start to see more of an agnostic trader's attitude toward where the bond market is right now. We're basically normalizing, Frank, from the standpoint of where we were years ago, prior to all this helicopter money that came in. So a 4 to 5% world is actually a normal world because it portends of a healthy economy, decent wage growth, and inflation that's under 3%. So in that world, which used to be nirvana for the stock market, it's presented a bit of a headwind here, but I think that's starting to resolve itself. As you noted, CES NVIDIA is it's the story. It's the first company here it's part of the digital industrial revolution that's taking place here. They're talking. Jensen Huang was talking like he's looking for 1 billion humanoid robots to be, populating the planet, 10 million automated factories, and 1.5 billion self-driving cars and trucks. So these are long-range goals, and the stock took a hit today, I think, because the traders are looking for real short-term catalysts, and they didn't get that today, other than the fact that Blackwell is sold out for the rest of the year. So without something, ultra special, a lot of the momentum money, hot money that came in, sold off. A lot of that was in the form of, call option buying and whatnot. So, but NVIDIA here is certainly the star of the show, and still will be the star of the show here for the year going forward. You had Microsoft this last week up their spending targets for AI from $44 billion to $80 billion from last year to this year. So people that are doubting the fact that investment capital is flowing into AI are just really on the wrong side of this trade. So I look for another good year for AI to continue to outperform, and primarily from the hyperscalers and also the infrastructure names out there that are building out the data centers and whatnot. And we look at what's happening already. The M&A market, mergers and acquisitions, is already picking up. Today we had Fubo TV and merging with Disney's Hulu. Yep. That's a really good story that's coming forward here. There's been several other mergers and acquisitions here late last year that are going to close out in the first quarter of this year. So M&A activity is picking up speed. That's very positive for the market as well. And at the same time, we've got a major breakout here in Bitcoin here, which is it ran up to over 100,000 here in the last few days here. It's pulled back here to around 96, 97,000. But this 2025 looks like another good year for Bitcoin going forward here, and that's a big story. And then certainly another major theme is the build out of the electric grid in the U.S. So our power plants are antiquated, and they are not nearly sufficient to manage the demands of AI. Just give you an idea here, just as one example, Frank, the one chat GPT query uses nearly 10 times the electricity of a typical internet search. And so here we are in this day and age where there's been a lot of under forecasting of what's going to be required to make the AI economy all it can be.
Very interesting. We're on there live with Bryan Perry, Chief Investment Strategist and Portfolio Manager at Mint Asset Management at mintassetmanagement.com. And this bond sell-off accelerating today, putting the yield in the 10-year note at 4.69%. That's the one that impacts the fixed-rate mortgage rates. And interesting to see the bond yields move up. This at a time when the Fed's been lowering short-term rates. And bond yields rise when prices fall usually, which is more common in periods of rising inflation. We did get the latest reading today on economic activity in the services sector, showing growth increasing, and one measure of prices at the highest seen in nearly 2 years, reigniting the inflation worries. And then that JOLTS report, the job openings and labor turnover report from the Labor Department, showing 8.1 million jobs in November, much stronger than most analysts had expected. We'll be getting the big enchilada monthly economic reports on Friday. With what's on the table here now, what do you think the Fed's next move will be, and is the bullish enthusiasm set to continue this month?
Well, again, traders have lost faith in the Fed cutting rates anytime soon here. Even the Fed GDP now from Atlanta raised their fourth quarter GDP to 2.7 from 2.4%, which was their previous estimate. So with that in mind, and you had, again, the prices index went higher here in this particular ISM report. That was semi-inflationary here. So that it was kind of a double whammy for the, for those that were expecting the Fed to consider any rate cuts anytime soon. January, I think, is off the table. The next meeting will be in March, and we need to see some disinflationary data between now and then. So, we had, the prices index was up notably, and so therefore, U.S. economy is unique, Frank. I mean, we got, Trudeau just resigned in Canada here. They're seeing a slowdown here because of the commodity prices are down. China is, seeing slower data come out there. Their stimulus has not worked. Europe is in a actual, they're in a recession, so to speak. So we've got the U.S., which accounts for 29% of world GDP, global GDP, is really, doing exceptionally well. And a lot of that is productivity gains here from technology. So there's going to be, it's a bifurcated market, and the U.S. dollar is on a tear. And so what we have now is money from all around the world rushing to own U.S. assets here. So this is a unique time for U.S. exceptionalism, and gives us a chance here to buckle up for a bumpy ride here with the Fed, but also at the same time, the market will reward those stocks and investors that buy good companies with outstanding and stellar top and bottom line growth.
Suddenly, the oil stocks have come to life today. Oil suddenly at the highest we've seen since last October, despite the strong dollar. And you noted the strong energy demand on the horizon. Crude oil in New York up around 74 a barrel, in London all the way up to 77 once again. What about the oil names here and where the price of oil goes from here?
I think it's okay for people to pick away at ExxonMobil here and Chevron. They actually popped off the bottom here pretty fast in the last couple of days. Up in here at 75 a barrel, that's kind of the sweet spot for oil companies because they're not too hot, not too cool. It's right in the middle where they like to see a lot of volume take place. But for the mantra drill baby drill, then the best name in that sector is definitely Baker Hughes. And so, there's going to be more drilling here on in the Permian, federal lands and whatnot. So people should look at BKR as a if you need a go-to name in the oil exploration domestic name that has, real institutional darling type favor, then that's BKR.
All right. And what about the cryptos doing what cryptos do? Very volatile. Coming off the holiday season, Bitcoin got up to around 108,000, then got into the low 90s, and at last glance, let's see, around 97,000 here at the moment. Ethereum hovering at around 33.85 here, and Doge, which had that big pop following the election, at around 35 cents here now. What's your impression of here on the cryptos as President Trump is set to take office later this month?
Well, it's a pro-crypto White House and a pro-crypto SEC and a pro-crypto, banking industry. Actually, they're starting to look at the BlackRock and all these other firms, Fidelity and Schwab. Everybody's starting to endorse the trading of cryptos, and I think that the wider institutional involvement now, and I think quite frankly there'll be some more regulatory oversight. Even though people talk about less regulations coming into the new year with the Trump administration, one area that does need more regulatory oversight is the crypto market here. And I think we're going to see more of that here. And the adoption rate by institutions will be considerably higher here going forward. So, Bitcoin has a clear shot to trade to 150,000 between now and mid-year. I think you're going to see a lot of chopping of wood here between 95 and 105 for quite a while, because that was a big move. And so, but you need to consolidate that move, put in a good base, and then once the short-term trading's out, and and basically, because there's been some fund flows coming out of Bitcoin at this level here, then you'll see another regurgitation of interest, and that should take Bitcoin to new levels here, where people are just going to again start to chase it. So I like this story. I'm looking more like the ones that really make the quantum move have been like XRP, and, it's the blockchain. And so therefore, I think with the utility side of the cryptocurrency market, Frank, is even, I think it has gotten to be very interesting. XRP was trading at like under 70 cents here just a couple months ago. Today it's 233. So that is, a quantum move, and something that people should take real note of here. And just the Bitcoin blockchain business that's tied in with AI gets to be a real story together, and that's when that's the larger concept that's starting to come into play.
All right, what about Coinbase? We see some rulings here today. According to Decrypt, the federal judge overseeing the SEC's lawsuit against Coinbase ruled today that the case must be paused until an appeals court can weigh in. The federal judge agreeing with Coinbase's argument that too many courts across the country are coming to different conclusions about the legality of crypto, which should be acknowledged as a novel legal issue, according to this report from Decrypt. What about Coinbase here and the various ETFs and the miners and right down the line that you track?
Well, I think Coinbase is, it pulled in here to 264 today, down, 8%. So it's a volatile name. I like the story very much. I think it's the go-to exchange right now. It seems to be where if you want to play crypto from the standpoint of just sheer volume, then that you buy Coinbase, because that's, they're the go-to name in this particular sector here without taking, quote, the price risk of the cryptocurrencies themselves. Just as long as people trading like fanatics, then I think that Coinbase stands to do extremely well. The CEO is a phenom. He's a wonderful visionary in this particular area here. He's kept it clean. We've seen FTX and Binance and the other exchanges here just really, the struggle mightily in years past. So they've emerged as the trusted name in the exchange business. So I think this is quite good. I also, for those that do want to trade Bitcoin outside of the physical itself, then you can look at BITX, which is a 2x a leverage trade here for Bitcoin here. That gets a lot of attention every day. It trades somewhere between 10 and 12 million shares. And it's it's called the 2x Bitcoin Strategy ETF, BITX. I trade that, and full disclosure, I like that because it trades, it's $5-7 a day, and you can go back and forth on that. IBIT is the largest, out there, and that is the one that's been the one that most people like to trade here. But in general, for those that say, I can't own straight up Bitcoins, for advisors out there, they're buying things like, MicroStrategy, MSTR, which is the largest holder of Bitcoin, in the world, as a public company. They continue to issue stock almost, weekly, serial, issuance of stock to try to continue to buy more Bitcoin here. And they're making an enormous bet on Bitcoin going to 200,000 or higher.
On the line with Bryan Perry. And at this point, Bryan, let me ask you the big question here as we get into 25 here. Where are you putting money now into or taking off the table?
Well, I think on this pullback here, Costco makes a lot of sense. They raised the membership fees here. You just can't even find a parking spot at this place, half the time. So Costco was trading up to 1,020. It's back down to 920. I think that's a really good spot for people to look at. Great support in here. I was buying NVIDIA today on this pullback here. It got down to 140. I think that people have a chance here when you buy this. When you can buy the stock, you can do it here on days like this. Aristonet, you look for companies that are building out these data centers here with the networking companies that are just stealing business from Cisco Systems and other names. That's ANAT, Aristonet. Marvell is another name that just did a huge deal with AWS, Amazon here as a new chip provider here for data centers as well here. So they're, it's kind of a 1-2 punch in my world. It's NVIDIA number one, and then Marvell number two for the chips. Certainly Amazon here. They've got a new quantum chip out there. And the company here with Waymo is already has a nice lead on all the self-driving trends that are taking place here and other competitors here. So and it trades really well. It doesn't give up much here. So Google, GOOG. Amazon on a pullback here looks really good now. Normally in the first quarter, retail sales back off from all the e-commerce buying here and all that kind of stuff. But you get a chance to buy Amazon on a pullback, you do. with the hacking in the U.S. Treasury Department, if you can believe that, recently. CyberArk, CYBR, is the best-looking name, both fundamentally and technically, in the cybersecurity world. Meta has a nice pullback here. If anybody's monetizing AI, they are. It's really helping increase their advertising on Facebook as well as Instagram, and they are utilizing their investment in AI dramatically well. Netflix here has just a technical pullback. It looks great. Now they're getting into sports, with NFL football and all kinds of other things. So Netflix here, at 880 looks like it's going to kiss this 20-day moving average here and probably head back up toward 1,000 or higher. And then certainly with the utility build out here, you have to have what are called engineering and professional services companies that actually build the capabilities for these utilities to deliver more power to the grid. And that's Mastech, that's MTZ, and that's Itron, ITRI. Those are your engineering companies here that actually are specializing in helping expand the grid rapidly. And coming off, you got to fade the natural gas rally here. There's so much natural gas out there. You can stick a pipe anywhere in Texas and the stuff comes flying out, or the Marcellus Shale. So EQT, which has made a big rally here, I would fade that if you own it. All things China. Xi has basically gotten rid of a lot of his pro-capitalist inner circle people here. So he's really taken a tough turn against what was really a very good looking economy here, and now they're facing years of struggle ahead of them though. So Nike, Starbucks, Yum Brands, and Tencent, which just got blackballed today by the Department of Defense.
All right, Brian. Well, I wish we had more time. As always, I could talk to you for hours, really. And thank you so much for that thorough assessment, and appreciate it as always. That is Brian Perry, Chief Investment Strategist and Portfolio Manager at Mint Asset Management at mintassetmanagement.com, also author of the 25% Cash Machine. All the best to you in the new year, Brian. Thank you very much for taking the call this afternoon.
You as well, Frank. Thanks so very much, and Happy New Year, everyone.
Thank you very much, Brian. And let's get out to the freeways now on this windy afternoon on 790 KBC. Mottek On Money continues 790 KBC. Stocks pulling back today as inflation concerns flare again, and the yield on the 10-year note hit 4.69%, the highest we've seen in months. The Dow down 178, S&P 500 down 66, the NASDAQ down 375, Bitcoin hovering just above 97,000 now, Ethereum at 3,385, Doge at 35 cents. The VIX index, the volatility index, spiking today up 11%. NVIDIA taking a hit, down more than $9 at 140 and change. Now the latest news here in 790 KBC. Mottek On Money continues here in 790 KBC. AI, a big topic of conversation in Vegas this week at the Consumer Electronics Show. A lot going on in Vegas at the show, and let's join Dave Graveline now live at the Consumer Electronics Show in Vegas, consumer electronics expert, high-tech guy extraordinaire, and host of his Into Tomorrow show at intotomorrow.com. Also president and CEO of the Advanced Media Network. Dave Graveline, Happy New Year. Take it from the top and tell us what's happening there.
Well, sure, Frank, and always a pleasure to join you and your KABC audience. You're right about AI, which is very typical the last couple of years. It's almost like everyone in the industry, the consumer tech industry, certainly claims to be using AI in one form or another. So we're seeing things every time we turn down another aisle. Of course, this was the first day of CES officially. It goes through Friday this year, and we expect to see a whole lot more other stuff. One of the most fascinating things today is we met a new type of robot, one that they're calling a new species, if you will, which is kind of scary because you tend to think of animals and humans as a species. But in this case, it's a robot that is very helpful in every way. So they're putting them in hospitals and in various places where they can be of assistance to us as consumers, but more importantly, helping the people that help us. So we'll see how that kind of thing takes off, but very clever. We've been shooting video of all of our radio interviews, and thanks for mentioning intotomorrow.com, because starting next week, we'll start probably about, at this point, 12 weeks worth of coverage, because there's so much to see.
That's so exciting, Dave. Well, you're in the right place, and I'm excited for you and the success of Into Tomorrow over decades now. And it looks like you also heard from the head of NVIDIA there, right? Making a splash there in Vegas. NVIDIA stock taking a hit. Our audience tracks out when the so-called Magnificent One very closely. Any big takeaways from NVIDIA and the buzz there on NVIDIA and its tremendous success?
Well, good point. And of course, this is the start of our 30th year of bringing folks into tomorrow. And yeah, there's a lot of buzz about how NVIDIA was expected to make a whole lot more news, certainly more positive news, but it didn't come out that way. He did talk about a lot of new innovations and some things that we can look forward to. But yeah, the market apparently wasn't very pleased, as you know better than anyone.
That's terrific, Dave. And let me ask you this. Looks like you're at the Sphere, I understand, and I'm delighted that you're able to hear us loud and clear. You're about to, there's more, another big event here or there in Vegas this afternoon. Tell us about that.
Yeah, it's the big opening keynote, if you will, or the main keynote, and that is the CEO of Delta Airlines. In fact, I think he was on our flight coming out. I'm not sure he would have been in first class at least. But the CEO of Delta, and folks think, well, it's almost like all the car manufacturers in the last couple of years and so forth. What does an airline CEO have to do with consumer tech? Well, we hope to find out and look for news after tonight's keynote.
Very interesting. And in the past, in recent years, cars have, of course, been loaded with technology and have seen a big presence there at the Consumer Electronics Show. Anything turning your head is on the automotive front?
Other than, of course, designs. You know, a lot of stuff that we've seen here over our 30 years covering it is prototype type stuff, if you will. And of course, most of those prototypes don't necessarily come to market, but they're cool to see. They're cool to wish for, that kind of stuff. But as usual, design, I think, is one of the most spectacular type things. There's a new vehicle that you open your back hatch and out comes a two-seater drone for you to fly around in. And that's kind of interesting. Of course, if they sell a lot of those, we better, watch our airways because it's going to be tough to get around those kinds of things. Maybe separate air traffic controllers for drones that are not autonomous.
Wow, that is exciting. Exciting technology there at the Consumer Electronics Show. And of course, self-driving cars. We've been talking about those for years now. We see these Waymo taxis here in the Los Angeles area. One was going around in circles recently while someone was trying to get to the airport. So technology is great when it works, right? What about self-driving cars there?
Well, exactly. In fact, I use the term on our show all the time, technology, go figure. What could go wrong? And there's a lot of that. But yeah, they're using now like mini buses, if you will, for shuttles. Driver, of course, and you just hope it gets where it needs to go without a problem. Have been able to ride in a few of those over the last couple of years even, because they are becoming more available and more autonomous.
Drones, of course, another big, exciting area. We've been hearing it in the news, of course. What are those darn drones flying around at sensitive places? Anything catching your attention? You mentioned that car that has a drone that you can fly in it. That's pretty interesting. Anything else that you see interesting related to drones?
Other than a bunch of us media folks typically looking up to see if those same kind of drones hitting New Jersey and California and Connecticut, et cetera, are hovering over CES. So far, I've not seen any, but we'll let you know.
Anything else, Dave, that's caught your attention? I know it takes a lot to get your attention, having seen everything from A to Z. Anything else that's notable there that you've seen so far at the Consumer Electronics Show? Is it well attended, by the way?
It's not as well attended. In fact, many exhibitors have been pulling out of this show in the last couple of years. And it started with COVID, where folks at various companies were doing things virtually. And I think a lot of these companies realize, we don't have to spend millions of dollars and be seen for 4 days by media and those in the industry. Of course, this show, unlike many others, is not open to the public. So if you're not media, as we are, covering consumer tech, or in the industry as a manufacturer, buyer, that kind of thing, you can't even get in here. And that's been the case all the time. But it's not as bad as 2 years into COVID when we were here and covering it. You could roll a bowling ball down the aisle and not hit anyone. I mean, that was very sad. But we've also seen some big companies that simply have said, we're just not going to do it this year. We'll do our own thing.
What about phones? Is Apple there? Samsung? Any of the phone companies there?
Yeah, certainly Samsung. Apple, we've not seen yet, but again, I reiterate that this is only the first day, and with as many convention halls as there are here, hard to see everything in one day. So the next couple of days, we're hitting some of the other halls, and we'd have more to report by the end of the week. But certainly phones continue, and I'm glad you brought that up, continue to be a big item, especially when they cost a heck of a lot more than they need to. And I think most people can relate to that. A lot of folks these days tell us that, they wait for a new phone and then they'll buy the previous version because now it's on sale. And there's nothing wrong with that. You can stay a model behind in a lot of consumer tech and not be missing out on too much. But then again, there's a lot of our audience as well and yours that want to be the first on their block to have some of the new stuff. So it's a challenge, but folks handle it.
Terrific, Dave. Well, thanks very much for taking the call here as the CES gets underway, and eager to see your reports on intotomorrow.com and hear about the Delta CEO giving that keynote later today. Dave Graveline, the consumer electronic expert, who's host of the Into Tomorrow show at intotomorrow.com, also president and CEO of the Advanced Media Network, longtime contributor on this program. Dave, great to speak with you. Happy New Year to you and your team there. Thank you very much for taking the call this afternoon.
As always, my pleasure, Frank, and anytime.
Thank you very much, Dave. And out to the freeways now with this fire emergency continuing now in the Palisades. Let's get the latest here on 790 KABC. Frank Mottek here. Did you know that for more than 10,000 years, gold has been the greatest store of value and considered a safe haven asset to preserve your wealth? Now with the U.S. debt at more than $36 trillion and climbing, a possible recession on the horizon, and the development of the digital dollar, central bank digital currency, it's more critical than ever before to safeguard your assets like your cash savings and retirement accounts with physical gold. Opening a gold IRA is one of the best ways to secure your wealth and create a stable financial future. Stop worrying about your retirement and the markets and cash savings in the bank. Feel confident, prepared, and in control with physical gold and silver. Give Joe Morgan a call now at 1-800-753-8534. Mention Frank Mottek, and you could get $1,000 worth of silver with a qualifying purchase. Call 1-800-753-8534 or visit UnitedGoldGroup.com. Mottek On Money continues here in 790 KABC. Recapping today's action on Wall Street, the Dow pulling back 178 points today at 42,528. The S&P 500 down 66 at 5909, and the Nasdaq down nearly 400 points today at 19,490. Looks like the bond sell-off has accelerated, and the yield in the 10-year note now at 4.69%. That's the one that impacts the fixed-rate mortgage rates. Bitcoin's been all over the place last couple of weeks. Right now up about 500 at 97,033. Ethereum up 22 at 3,385, and Doge at the moment at 35 cents. NVIDIA, the magnificent one, taking a hit today, down more than $9 at 140 and change. Price of oil suddenly the highest we've seen since last October at $74.25 a barrel in New York, and Brent crude in London, the global benchmark, now at $77.05 a barrel. Price of gold down a couple dollars now at $2,665 an ounce, and silver up 4 cents at $30.73 an ounce. Joining us now, Adam Millsap, Forbes magazine contributor, senior fellow working on economic issues at Stand Together Trust, and co-author of the Restoring the Republic paper, a 100-day plan on realigning government agencies with the Constitution and how executive orders play a role. This as President Trump is set to retake the White House on January 20th. Adam Millsap, Happy New Year to you, sir.
Hey, how's it going? Thanks for having me.
Thanks very much for taking the call. Tell us about your report and what you see ahead as far as executive orders we can expect here very shortly.
Yeah, so the report is basically just about getting the government to function as the Constitution intended. So there's over the years, for the last, at least 100 years, since the 20s, there's been an erosion of separation of powers between Congress and the executive branch. where the president has too much authority and Congress doesn't really assert its authority in lawmaking. And there's also just been erosion of federalism between the states and the federal government. So the states have pretty much become administrative units of the federal government rather than their own separate sovereign entities with rulemaking and legislative authority and stuff like that. And so this book that we wrote, this booklet, is about what actions the federal government can take, both Congress and the executive branch, to reorient the U.S. government system, like I said, from the states up to the federal government and then across the federal government's branches so that it functions correctly.
Give us some examples of what's included in your report and what you think President Trump might do when he takes office.
So, there was a couple of examples about the president actually ceding some authority by controlling the agencies. So President Trump did some of the stuff the first time around, a regulatory budget, so constraining the amount of regulatory costs different agencies can impose on the economy. He did this last time, and he had like a one-in, two-out rule to try to cut regulation. So that would be a great EO to reinstate. A sunset of agency regulations. So agency regulations expire after a certain period of time and have to be reevaluated to see if they're actually working as intended and if they should be reinstated. You can put a moratorium on new regulation when he first comes into office while he tries to get a hold of what's going on across the agencies. And then some of the rules actually return power back to the president where it should belong. So right now, there's some independent agencies like the Federal Trade Commission and the Federal Communications Commission, National Labor Relations Board, and they're not subject to any oversight of their rulemaking from the executive branch, the Office of Information and Regulatory Affairs, or IRA. So another EO would be Trump saying, hey, independent agencies, you actually have to submit your rulemaking just like all the other agencies so I can keep track of what's going on.
What prompted this report, given the last 4 years? What about the executive orders we've seen under this administration?
Yeah, so President Biden has imposed more regulation on the economy, more regulatory costs on the economy than any president in recent memory. Far and away above and beyond what Barack Obama did, and way more than Trump, over $2 trillion worth of regulatory costs. So the administrative state has just gotten out of control. Like I said, it's been out of control for a while, but Biden just took it to a new level, being very aggressive in its rulemaking. You know, the courts have had to rein it in with, getting rid of Chevron deference and trying to control what they do because they have broad readings of the powers that Congress gives them, and then just try to regulate everything and dare somebody to sue them. And so a lot of these rules, and we think Trump has a chance to implement them, is about getting the administrative state under control so that it doesn't have its, boot on the throat of everyday Americans who get caught up in it.
And a lot of these regulations seen as inflationary, right? And today the market was spooked by some indications that inflation is still running hot, and we'll get the jobs report on Friday, which the Fed will be paying attention to, and the Fed's next move is still an open question. What about that aspect of it and layering all this regulation on, impacting the cost of doing business?
Absolutely. I mean, regulations slow down economic growth. They constrain business activity in ways that are often unproductive through command and control regulations that basically tell businesses what to do, even though the people writing the rules really have no idea what they're talking about. So cutting back this regulation and getting the regulatory state under control would certainly do a lot to boost economic growth. I've seen studies out there saying that, we can raise GDP significantly by cutting regulation back to like the level it was in 1980, something on the order of like $10,000 per person in GDP growth. And so this is an opportunity for Trump to come in and cut this regulation and get this regulatory state under control so that the economy can flourish.
We're going to see him behind that desk with a pen out and holding up the executive orders. Once again, what do you think will be his first executive order? And maybe you can go right down the line and help us out for what we can expect.
Like I said, I don't know exactly what he's going to get to first. I mean, he has a lot of big plans, but like I said, I hope some of these things about the regulatory budget, the moratorium on new regulation, sunset provisions, anything that causes these agencies to reevaluate what they're doing and to slow down, I think would give a huge boost to the economy. And it also just creates certainty. I mean, one of the things entrepreneurs and businesses hate the most is uncertainty. So a regulatory state where everyone understands what's going on and understands what the process is for writing a rule will go a long way into giving businesses the certainty they need to invest in new factories, invest in new products, invest in their workforce. And so right now we just have too much oscillation, between administrations and stuff like that. And we need to slow things down and create a little more stability. And I think Trump can do that with some of these executive orders.
All right. And how did things get off the rails? You've gone back to see how the framers wanted this to work. What went cattywampus over the years?
I think it's because Congress just quit doing its job. They just got the idea that they didn't know what they were doing. They didn't have the expertise. All the expertise lived in the agencies. So they wrote very broad, vague laws and allowed the agencies with their, experts fill in the gaps. And they just lost sight of what was going on. And they also just don't want, some of them just don't want to take responsibility. It's much easier to just write a vague law, defer to the agency, and let the agency fill in the details. And then you can tell your constituents, hey, that's not what we intended, but you didn't go out of your way to stop it either. So I think some of this, like I said, is Congress reasserting some of its authority, and when it writes laws, be more specific, create less leeway for the agencies, and then we'll see less of these regulations and rules come down on businesses and entrepreneurs. See a big boost in economic growth, but I think will go a long way to making Trump's presidency a success, just like his last one was when it came to the economy. I mean, the economy boomed, and I think we can see that again.
All right, for anyone that wants to see your report on all this, realigning the government agencies with the Constitution and how executive orders play a role in all this, where can people see that?
Yeah, so it's on the Pioneer Institute's website. You can find me on Twitter at AA_MILSAP, and I'm also on LinkedIn.
Terrific. Well, thank you very much, Adam. We do appreciate it. That is Adam Millsap, Forbes magazine contributor, also senior fellow working on economic issues at Stand Together Trust and co-author of the Restoring the Republic 100-Day Plan on Realigning Government Agencies with the Constitution and how executive orders play a role in all that. Thank you very much for joining us. We wish you and everyone there a happy and healthy new year.
Thank you. You too.
And stay tuned now for the 790 KBC News Blitz. I'll be back with more at 4 tomorrow afternoon right here on Mottek On Money on 790 KBC.
Bravo TV star Lala Kent holds nothing back on the Give Them Lala podcast.
No, I have a very short fuse.
Get to know the TV personality.
I don't need to watch the show because I get the real life version.
From relationships and motherhood.
Let me tell you something about breastfeeding.
To business and beyond.
You are scared of failure, so it prevents you
from trying.
This is where we implement a big set of ovaries, and then we obsess.
Follow and listen on your favorite platform.